Good morning, good afternoon, good evening, yWhales. My name is Siva Avvaru, Managing Director of yWhales Solutions, and I'm joined by the co-founders of Bits Crypto, Alex Poscente and Jameson Rader. How are you guys?
Doing well.
Great.
Man, I've been doing some background and searching on your guys' platform. It looks like, Bits Crypto. Let me know if this is kind of a good summary of the platform. Kind of a decentralized background trader for users that want to enter the crypto markets. Is that a good one?
That's pretty close to spot on. We noticed a lot of market volatility about a year ago. We built initially what was the Acorns for Crypto model. We can get more into that later. And then saw the market, going through the cyclical volatility that we've seen in 2018. More recently, decided to build a smart background trader that can monitor the market for you and auto execute on your behalf in a fully decentralized capacity. We'll get into what all of that means briefly, but yeah, nail on the head.
Oh, that's cool. And we'll get more into the platform, but how do you even come up with that idea? What Acorns, right? And there's a couple of other platforms that allows you to true up, spare change and, apply that into other investment vehicles, so to speak. But, now taking that and applying a lens of crypto, where was the birth of this idea?
Yeah. Originally it was a volatility fighter. It's no secret that volatility is everywhere in crypto. And then I'd say there's a lot of new trustless tools that have come out, very fun stuff, regardless of whether you're a crypto fan or not. There's some really cool cryptography elements. And so one kind of major advantage was to see some of the catastrophes that have happened, like FTX, and realize you could take some of these trustless tools and let people have a way to keep their money where it's not going to get stolen. That's always a positive thing, regardless of market conditions, the security of your funds.
Mm-hmm.
And full transparency of their capital, so to speak, right?
Totally. One of the main pitfalls that we saw was that, in centralized exchanges like Coinbase, where it's this single institution that's holding your funds and presumably going to keep them safe. Obviously, we saw the pitfalls of that with FTX, losing a lot of people, acting as a bad actor, and burning a lot of new users and new investors to crypto. So we wanted to create a space where users maintained full ownership of their assets. And we were able to basically monitor the market on their behalf while they still maintain ownership throughout the process. So it has the same safety security element of keeping, your funds underneath your bed, so to speak. Have you seen It's a Wonderful Life? I always bring this up when people are talking about the centralized exchange, the classic bank runs that we saw in movies or in FTX, or we see Coinbase right now being threatened in Binance by the SEC. A lot of the giants are falling in the centralized institutions space of crypto. And we think we're basically hedging a bet on the rise of decentralized institutions to house crypto investing.
So were you guys crypto traders full time before you got the idea for Bits? Were you guys, Forex? Were you guys, TradFi traders? What are you guys' backgrounds? How'd you get into this?
So crypto a long time ago. I think I was in first year university, so I'm 29 now. So this was, I was 18, 19 or something like that, a long time ago. My background, graduated from Northwestern University, created a sports tech company, was able to sell that company about 2 years later, created another company that transmitted data through high frequency sound that people can't hear. Deployed that massively in sports as well, 20 million downloads, some really cool customers, NFL, whatnot, Elton John, fun stuff. And then just the whole while was also interested in Bitcoin primarily. And so it's kind of a natural, and software engineering, I'm a software engineer. So it's kind of just union of two interests.
So my background, I'm from Dallas, Texas originally. I grew up as, being a serial entrepreneur. Started my first company when I was 10 years old. It was a summer camp for kids. I've always loved the intersection of, solving problems and impact. So I went to the Wharton School of Business. There I founded a company called IV Insights, which was basically one of the first remote workplaces during COVID where students could find part-time positions. So it was a system that would match software developers or business consultants with each other and deploy them to go work with startups across the US to help students and startups connect. Scaled that as a solo founder, totally bootstrapped, grew it internationally, which was a super, super exciting process. Learned a lot about managing hundreds of people and teams and delegating. And then, after studying at Wharton, I moved out to California, wanted to get into crypto space. I've been exposed to crypto for about 8 years at this point. This is my first time building in the space, but about a year and a half ago, we raised our pre-seed round for Bits on the premise of being an acorns for crypto. And this is to kind of paint the picture. The market was super hot. Everyone wanted in. It was kind of that like crypto was a little bit elusive and felt like almost ethereal and untouchable and intergalactic. All the marketing was very anyone who saw it knows what I'm talking about. But
it was like the mystical beast, so to speak, right?
Yeah, totally.
You couldn't get away from it.
Totally. And we wanted to make it really palatable and onboard the next, millions of crypto investors through the Acorns model. And for anyone listening, Acorns is what they did is they take every purchase you make in real life, round it to the next dollar, take that spare change and invest it for you. So Acorns typically does like a standard stock portfolio. We wanted to make the Acorns for crypto. So all of those spare change roundups, passively investing into your own crypto portfolio for new users just to enter the space, get educated, not feel it, an intense financial burden. We released that about 8 months ago, saw it validated amidst a pretty hectic market. And that was kind of the impetus for starting it. To give people.
So were one of you guys using the Acorns platform and you thought, hey, a light bulb moment went off and said, hey, right now it's a major bull run in crypto. Everyone, at the Thanksgiving table is talking about, you should get an ETH and, I don't know, it's too confusing and, maybe on the Acorns platform. And now, hey, this could be applied to crypto. Or was it something that simple, or did you guys meet at a conference, or how did your guys' paths align here to actually come together and form the beast that is Bits Crypto?
Yeah, I guess the creation of it was, originally, as my experience as a founder, you want to start off with a MVP product, get feedback, and that was something that could be built, and we could start the feedback cycle quickly. Now deciding, hey, I'm going to create a new exchange structure that is like a hybrid model between like trustless and trustful systems. Like that's going to take a long time to build, and you're going to be building it 2 years later. So it was a middle ground between a useful product and something that could be built quickly. So launched that and was able to again start this feedback cycle that's so important for startups. As for how Alex and I met, we were introduced by a mutual friend who also love her. She is a founder herself and is intense. She's great. But yeah, she introduced us. They met at Launch House.
Yeah. So and then wait, actually, Jameson, I feel like this is a good time do you want to explain the whole trustless component? Because if the people who are listening might not be super exposed to Web3 or crypto, do you want to talk about what that actually means in the space?
Yeah, sure. So there's the spare change element, which is nice and very intelligible. The next part of the company and the biggest update that's actually being launched in like a few weeks is probably more exciting for true like Web3 junkies. So how that works is crypto is like an industry that suffers heavily from amnesia.
Yes. Yes, I agree.
Not just these like major hype cycles, but there's also these big explosions of centralized exchanges. So if you go back to like, I think it was like 2014, there was Mt. Gox. Yeah.
I was one of the first users of Mt. Gox. I think I lost like 20 Ethereum that I can't even access it anymore. Yeah.
So there's still the fallout of that. And then people are just like, forget. And then FTX happens. You're like, wait, how could you ever see this coming? It's amnesia, like after amnesia. And the really cool thing about what's happened over the past 2 years in the crypto space has just been a lot of cool trustless tools. it's really hard to parse those tools and know like what you can believe and what you can't, because you can't just be your own be your own bank, be your own like security auditor. Like, that's very hard to do.
I mean, the big problems that plague, companies in our industry, right? And that try to operate, without some sort of proper oversight or something of that nature.
Yeah. So there's a bunch of reasons why you'd still use a centralized exchange, even though there's now decentralized exchanges. One of the, not just that decentralized exchanges are often hard to use, but there's feature sets that you can have in a centralized exchange that you can't have in a decentralized exchange. One of them being like, hey, I don't want to buy Bitcoin right now. I only want to buy it if it drops below $22,000. Well, you can't go to like your run-of-the-mill DEX and put that in place. You need to set up a reservoir of stable coins and connect it to some price oracles that trigger this function call. Like, it's hard. And so that's why people still use centralized exchanges, even if there's decentralized alternatives. So what we've built is the ability to use the centralized exchange feature set with the decentralized protections of self-custody.
Mm-hmm. And to clarify briefly, the self-custody component is really, really key in this, because we never hold your funds, nor can we ever lose them or exploit them for our own benefit. Our aim is to empower the users. So we act as a technology layer throughout different decentralized exchanges, rather than acting as our own. And
to clarify to our users, that means that there is not a wallet within your app that you're passing those funds back to a third party wallet that is maintained by the end user.
Yeah, so you can actually create a decentralized wallet within the app, but that's a convenience. You can also any decentralized wallet would do the same. Could work.
And then the other thing is, one of the strategies, like we said, we wanted to build something that we would want in a down market. And right now what we want is the ability to own our funds and also monitor things while, we're asleep, we're doing other things. Like, we don't want to be day traders in crypto. It's too volatile, moves too quickly. There's too much to track. So in essence, there's a whole suite of investment strategies that we will be launching, including like copycat trading. If someone changes their account on chain, it can be linked and auto reflected inside of your own. Social sentiment trading, where if social sentiment changes about one certain type of crypto, it can be reflected in, your own investment portfolio. Fear and greed index trading. So basically all of these different components where we're funneling in different data inputs to make decisions or notify you about decisions you can make. That's the idea. Does that make sense?
No, that makes sense. And James, do you mind if I call you James or Jameson or?
Yeah. James.
You mentioned about essentially what I would consider some type of futures trading or derivatives trading when you're talking about betting on the price movement of an asset or a financial instrument. So are you guys tapping into kind of the futures components of these centralized exchanges to offer that to your customers via your platform? Is that what you were implying or inferring?
So that's one element. But I guess it's kind of changing. Like, there are certain things, decentralized platforms where you can, trade futures and whatnot. The thing is that you have to be pretty advanced to be able to use them. And again, they're still connected to these price oracles. You can't do things that you can't get down to the personalized level of like, I just bought a coffee, now I want to round up 50 cents. And going back to the acorns part. And so it's almost like a paradigm shift of how to invest rather than the techniques of what to invest in or what's causing that. It's just this new hybrid model where there is some trust involved. You are trusting us to report to the blockchain properly about true information, like connecting your bank account to Plaid so that Plaid can say if you bought coffee or not, or like if the public sentiment about Bitcoin has trended up on Twitter lately. Like, that is what that's the trust element. You're trusting us to report that information correctly. But the thing is, we have whether we tell the truth or not, whether the platform tells the truth or not, there's no way to financially benefit from incorrect information. And so that's what makes this different and unique, is there's no way to, by the trust element, you get the entire feature set of a centralized exchange, but you get the protections of no one can really reach in and steal the funds from your wallet. You're not loaning them anywhere.
Mm-hmm. Right. Yeah, that's interesting. So have you integrated any like awesome DeFi protocols or capabilities within your platform itself? Like, do you guys have an Oracle on the back end? Are you guys interacting with things like Aave or SushiSwap or, Arbitrum or anything of that nature, or DEX aggregators? It sounds like you're really harping on a lot of the benefits of DEX tool sets or capabilities, and trying to expose them to a non-degen audience who wouldn't be exposed to DeFi capabilities.
Yeah, so definitely a lot of DEX aggregators, lots of a lot of the foundational work has been making this new hybrid model. Now it's very easy to implement things like SushiSwap or whatever. We're using 1inch for an aggregator. But the hardest part is actually setting up kind of the concepts to how the trading mechanisms work, and where the trust elements come into play. And so that's what's been the big heavy lift, has kind of been the architecture. Now you can kind of swap out the furniture, that sort of thing.
Mm-hmm. But the intuition is totally on point, Siva. We want to make decentralized finance really accessible to non-degen users. And so on the front end, when you download the next app, like it basically, if you type in bits right now, BITS in the App Store, we're the first thing that comes up, and that's the Acorns for Crypto model. In a few weeks, we'll be launching this next iteration, which is, the smart background trader. And it looks and feels and breathes just like any other like fintech app, but under the hood, it's totally powered by blockchain technologies.
You mean I don't have to go through 15 dialog boxes to authenticate myself, and I don't have to connect 5 different wallets, and just to be able to access spot trading or something of that nature?
Yeah, our aim was to remove as much friction as possible. Yeah, so hopefully, yes.
Oh, that's awesome. Well, and I'm going to ask the 10,000-pound gorilla question in the room right now, which is, most of these DeFi protocols, even though you're not technically a DeFi app, but the biggest issue that they face right now is the ability to on and off ramp, fiat, right? How do you guys address that problem for Joe Schmo, so to speak, interacting and trading and rounding up on bits on the Bits app?
We actually have a really cool answer to this one. So involved in on-ramping and off-ramping, that it would qualify as like money transmission, which is not something that we do or want to do. That said, we've really set up with a partner network, a very unique flow where it's basically kind of like a legitimate virtual trust in the user's name, where they still have like custody of their actual funds, even when it's not on the blockchain, through actual, So basically how it works is when you go to wire money, say you wanted to wire money into your platform. If you look at FTX, they had to wire money to like Alameda Research. It was a huge scandal that no one really even noticed that you were wiring money to this like entity that's not even your exchange. And what's really cool is with the flow that we have set up, you're actually wiring that money if you choose to wire as the on-ramp to yourself. The recipient is you. And so it's a different way of actually handling not just crypto, but of handling fiat as well.
Yeah, I mean that's that's the biggest risk, right? Especially for an end user interacting with any sort of like DeFi capability is, how do I get money in and out? It can't just stay in some sort of crypto forever. Although a lot of people do it. Right?
Yeah, some people would be like, yeah, I can't. But that's a minority position.
We'll call those minimization strategies, right? But no, this is cool stuff. So, one of the cool things about DeFi and in even just the fintech space in general is that I would qualify that a lot of Web3 DeFi degens have a lot of intuitive approaches to how traditional money markets or, how financial instruments should be traded within TradFi markets. Based off of your guys' journey here so far to date with Bits, what have been some of like your interesting learnings that you didn't have prior to actually starting this, that now you've gotten your hands dirty, you're deep in the DeFi space, you're also in the TradFi space, you're now exposing, some sort of fiat on ramps, off ramps to end users. You have to be aware of regulatory aspects, right? Because that very much impacts the nature of your business, so to speak, or could have impacts. What are some learnings that you like, aha moments that, wow, that's new, I never knew that. We maybe that's based off of your customer acquisition and you're attracting certain types of customers. Maybe that's you're attracting certain geographies. Maybe it's, hey, we found that users are trading X, Y, and Z cryptos more than they are trading, what we initially thought. Like, what are some cool things that you guys have discovered along the way here?
I'll go ahead and jump in. Since my background is like a lot of traditional finance, the people I was around, companies I've started, I've worked in, working with Microsoft or in private equity, and even going to Wharton. I've never worked in such a volatile industry. And I mean that to like the nth degree. Oh my God, it's crazy how much changes on a day-to-day basis. And it's a two-edged sword. So on the one side, it's like there is a growing pains era that we're in right now, I feel, with blockchain technologies at large, where people are trying to find the best use case of how to interact with World Web 3 and what rails should crypto like exist on, and how should it be used, and should it be cross-border payments, or how should it interact with people? And that's like still being figured out. There's no, one straightforward answer or product market fit with crypto at this moment. The other side of the sword is a lot of the giants are falling right now. Like we see Coinbase is being threatened, Binance is being threatened. A lot of people have bad taste in their mouth about crypto players that exist right now and that basically monopolize the entire industry in the US specifically, which as a founder is really, really exciting just because it is a green field. A lot of these big players falling means that the market's opening up for new people to move in and capture market share and really grow and expand. So I'd say the biggest like aha moment or learning experience for me is the tightrope balance of a new technology trying to find PMF in a space and all these players churning in and out. And so it's like finding the balance of, can we find product market fit at the right moment where the market has opened up? And it does feel like we're approaching that, especially with the new product that we're building, which we believe will be bigger than Coinbase.
Oh, that's I agree with a lot of the testament there, especially around product market fit. If someone says that they have the playbook, it's not similar to SaaS has SaaS models, and the way you acquire customers is a pretty at this point about a decade mature. There's a templatized way. There's standard approaches, standard frameworks you can follow to acquire X, Y, or Z type of customers if you have a SaaS platform. But if you have a crypto oriented platform, I mean, it's blue ocean. It's still undefined, and we're still so early to this space, right? The percentages of the population that are even actively trading crypto right now are so minuscule in terms of what could be. I mean, just the crypto market cap in general is so low compared to even someone the size of BlackRock, right? I think BlackRock's market cap is 8 trillion, and entire crypto market cap is 1 trillion. So you have entire companies on this planet that are 8 times larger than the entire space of the size of this industry, right? And that's how early we are. It's it's and building kind of double clicking into that, building and trying to build in this space, you're probably interacting with a much different type of psychograph or persona. And you're starting to interact and get deeper into the depths of the degens, right? I know from personal experience, especially for trying to hire crypto natives as consultants within my firm, it was a huge eye opener coming from like that MBB style of a background where there's a set way, there's set methodologies, and it's a very much defined pedigree. And then the way you interact with individuals is a very set way of engagement. And when I started engaging, even started getting involved with like Bankless, started talking with a lot more degens, even trying to hire some degens as consultants for my clients. I had a hard time even just getting them to get on the show their faces on webcams.
Mm-hmm.
I had two guys tell me I had to start calling them by their usernames. I couldn't call them by their normal name. If I had to take a takeaway, there is a whole generation shift, even in the nature of professional working environments that crypto degens are starting to penetrate and permeate into, right?
Oh, for sure. The way I've described the past 2 years of working in Web3, it's like the Gatsby of tech. It's like the craziest people, the wildest like parties and events, and just everyone is. It feels like everyone is really deeply just an anarchist at heart. And yeah, and I can definitely attest. Like the culture is way more high voltage than anything I've seen.
I will say though, at the previous startup that I founded, the entire dev team went by the usernames. No one went by like their real given name. So it just feels, but it's so funny. I've done a lot of calls where people won't turn on their camera and they like are potential investors. And you're like, what's going on here? The anonymity is maxed out. People really love it.
Well, it's still.
Yeah, no, I was going to say I wanted to hear his answer of his aha moment in doing this whole thing.
Oh man, the few came to mind, but I'd say that one of them is I've just never built a consumer-facing company. I've built like a lot of apps that are sold to businesses that are then deployed to customers. Like so, it's kind of B to B to C, but you're not optimizing for the end consumer in that case. You really are optimizing for the business, and so this whole flow of being consumer facing. So it's not necessarily an aha moment specific to like crypto or anything, but the tool sets that you use and the analytic flows that you look at, and the flow of information down to the user, and then what you need to track to make sure that it's actually a good product and people aren't using it and people aren't like getting mad and hitting a button 100 times. Is very different. And I'd say I do love data science. And so that is one aspect of a consumer facing company that I didn't realize I was kind of like missing out on.
UI, UX became king, right?
That is true, especially in crypto, because
exactly.
Crypto, it's tons of consumer facing applications. So you're competing not just on necessarily like a product level, but like what is straight up easier to use and looks better. It is important.
Right.
That's actually one reason that we developed our application not in a cross-platform language or framework. Let's say like React Native or something, or Flutter. We actually did full native, so two separate stacks for the front end, native iOS with Swift UI, and then Android with Kotlin, and it's a lot more work, but it's kind of those competitive edges that kind of make a big difference when you're doing something consumer facing.
Well, and I think a big thing is like, Web3 kind of has a marketing branding issue or problem, right? It's the apps are clunky. They're not favorable to first time users, especially non crypto natives. They're not app. I can tell my parents, and I always use this pressure test, especially for B2C facing apps. Can I go and tell my 65-year-old dad, go download this from the app store, and can he instantly get it? Can he intuitively pick it up? And if he can't, you've just isolated a substantial portion of the market from being potential customers of your app, right? And vice versa. Both extremes from the age breakdown, right? And so, what were some interesting things that you guys have done to optimize for that onboarding of a favorable customer experience of your platform?
Mm-hmm. We did extensive user testing when we first released the Acorns for Crypto model. We did the whole stress test. I sent it to my 60-something-year-old parents. I was like, all right, guys, let's see how long it'll take you to create an account. And they could. We rewrote every single coin listed on Coinbase to be like an ELI 5, explain it like I'm 5, into its most like components. So really breaking down all the elusive like intangibles about crypto and trying to make it super, super easy to onboard, connect your accounts, and also break down, hey, these are the most popular cryptocurrencies. This is what it actually is. And empower the users in that way. But that's the first thing that comes to mind.
Did you guys find anything as you're going through kind of like these customer mapping journeys or customer experience mapping exercises that seems intuitively this makes sense, but when we actually tested it, it did not make sense, and we found it actually achieved the opposite of what we were attending, what the call to action for the user was going to do?
Oh yeah. I can think of like some UI elements where like you think, oh yeah, of course that people are gonna know how to click that, and then you like do a bunch of tests, realize that nobody knew it was a button, and not only it was a button, it was like the most important button that opens up the whole part where you customize what you're rounding up into, and we had spent a lot of time like fine tuning this like giant button to have all these cool features, and nobody knew to click it. And we had to redo that like 4 times because we kept overestimating the what the user would know. We weren't like doing a good enough job at placing ourselves in their feet. And then from then on out, we were like way more about user testing in the design phase before you actually engineer the thing.
Another one that I think we weren't expecting, but we found is we have right now, basically you'll get $5 if you it's like a $5 incentive to download and share the apps, some sort of like referral bonus. And we found that consumers who download from that $5 incentive are often misaligned with the user that we like necessarily would want. And I've spoken to quite a few like big fintech companies. For instance, the original COO of Venmo, him and I were chatting, and he was like, we did the exact same thing where it was money for referral. And the people would come in, basically just wanted their money and then to cash out and then leave the ecosystem. So his advice, and this is one that we've really tried to take into account with the next version, is focus on product superiority and bake in growth loops all related to the product inherently, to kind of move away from that monetary incentive. So that's something that, yeah, I didn't expect it for people to get so up in arms about, but people really want their $5 in crypto.
I mean, that's what Cash App did very successfully at the beginning, right? It was they spread like wildfire, but they also, hit the marketing and PR channel very hard, right? And getting, and instead of having that natural organic referral growth strategy, what they did is, they hired a bunch of influencers right out the gate and approached and targeted a portion of the market that wasn't traditionally being targeted from, fintech apps, so to speak, right? And that's an interesting takeaway, from a Web 2 perspective. Did you as you guys were building features, obviously, in a lot of my clients, especially when we're doing go-to-market strategy and we're doing product market fit and we're trying to align feature sets and what comes up through the backlog and what's eventually going to hit. Did you guys have like features that you wanted to initially, go live with, and thought that they were going to be competitive advantages or, things that would place you as a differentiator in the marketplace, that eventually didn't make it to the first, go live, so to speak, or are still within your backlog that you want to eventually roll out, or you just nixed entirely?
Yeah, I think you get a lot of feature recommendations, and it's hard not to do like feature creep or just keep delaying the launch because you need to build in the next thing. It's really hard not to fall into that habit. There's other things that we were like, oh, this is going to save us so much time if we just build this in, and you build it in, and you realize that like it not only doesn't save you time, it like sets you back really, really far. So God. I guess not letting the right thing feature creep versus like just letting anything feature creep.
Totally. And like an example would be integrating with Coinbase for the first version. We wanted to connect as much AUM as possible, like assets under management. So, and because a lot of that is housed within Coinbase, we're like, oh, let's just connect the APIs. We'll interact with their ecosystem and build like the Acorns model on top of it. So difficult to work with their API, and we spent a lot of money and a lot of time working with their code base and trying to build something that was compatible with it. Where now we've completely cut it out of like the next version.
Oh, that's interesting because their API. I know my devs have tried to play around with their API. It's they push it out as easy to use. You can take it like a Magic SDK and you can manipulate it, and you don't ever have to talk to us. Really, that's a
So there's like the Coinbase Cloud stuff for developers, and then they have like the other API that they probably don't talk about, and that's like so impossible to use. It's so bad. It's not documented, and you get like these obscure error messages that actually don't mean anything. And we spent a lot of time trying to like change ourselves to accommodate this API, and then realized that it just was not doable, and we needed to rebuild a lot of this feature set that we were relying on Coinbase for. Yeah.
So you guys are live now, right? And you guys have been live for what, eight months? I think you mentioned, or
yeah, about that. Yeah.
And what are your metrics to date? Like, what's the ride been like so far?
We got a few thousand users, like 2,000 maybe the first month, 2,500, and then we've had pretty good like user acquisition since. We've noticed that like the biggest problems that come up are honestly related to that Coinbase issue. Like you can look at the user flow and be like, oh, okay, so if they take this flow, retention is going to plummet. And if they take this row, it's actually going to be okay. And oddly, a lot of that in our application depends on like, did they connect Coinbase? Did they connect it? And it turns out they had their Coinbase set up the right way. So we've done it surprisingly well, because honestly, it launched right when like crypto started like going like less popular. So I've been like impressed with that. We have a lot of connected AUM. I'd say we have like a dedicated user base who are using the application, and it's actually not as hard to get new users as I would have thought.
Mm-hmm. Our initial customer acquisition cost was sitting around $5 per person, where industry standard was at 40. Now it's what is it now, like 200 something? So we were sitting at like a 40th, like a fraction of the typical cost. I'm sure it's just increasing now, but we saw thousands of users in the first 8 months. Like Jameson said, we have quite a bit of money connected to the platform, and are recording about 250,000 financial transactions every month with our users. So there's quite big of a pool of financial data, as well as users who like our product. That being said, though, the next version it just has so many more capabilities, and we're really, really excited about that. We're actually
can you mention any of those? Is that some publicly, or do we have to wait? Or
oh yeah.
Go ahead.
Oh no, I was just gonna say the next version is the Bits 2.0 that we've been discussing over the call, the background trader that's really decentralized. And when we do launch that, we're prepping a full seed round raise to basically say, hey, Coinbase is really hurting. Different exchanges or platforms where people can invest into crypto are really hurting. We built theoretically what is the smartest, safest decentralized platform for people to invest in crypto. And this is that. So we'll be raising our next round after launch. That's, I think, one of the biggest updates.
Oh, and is that background trader? Is that an oracle by nature? Is that a Web3? Is that a DeFi oracle, or maybe expand on what the background trader kind of mechanism is?
Yeah. So how it kind of functions is the user, in so many words, sets up this like preloaded transaction on the blockchain that can be something to the effect of, if this public sentiment about Bitcoin starts to trend up above hits a certain percentage up, whatever that's defined to be, or like increases by 5% or something, just using natural language processing tools to analyze the sentiment about Bitcoin. So they kind of set up
the sentiment that you're analyzing, is that like Twitter feeds? Is that are you
like
social media?
Yeah. So you'd set up that transaction, and you'd think typically you'd have to then rely on a centralized exchange to execute that for you. That's not how Bits platform works. So you set up this like pre-cached transaction that depends on public sentiment on Twitter, and the transaction could be, hey, take $10 out of my bank account and trade it for Bitcoin. Or take $10 and trade it for ETH, and then take that ETH and then stake it and let me earn interest on it. So you can set up this whole complicated flow of how the flow of funds works, and then we oracleize this information. And sometimes that's decentralized price oracles, but other times, whether it's personalized information like your bank account, if you bought coffee, or public sentiment about Twitter, we're oracleizing this information, and then if your criteria gets met, the whole transaction then it's triggered and it flows through.
So like let me reframe that in like an example use case or scenario. So like, let's say my account on Bits, for example, and maybe I can define some parameters. This is going to be unfair. I used to specialize in NLP and intent and utterance. So like if I, you defined intent and utterance around, Gary Gensler no longer mention or clearing Solana as not a security, and I expect the price to shoot up, would I define, that those utterance terms, and then, within the platform, and if, there's a match for Gary Gensler clears Solana or something, then I have a pool or a preloaded transaction of, let's say $100 on Solana, and it executes that on behalf of me. Can I set that up that way where it's like, if X person says this and I predict the price is going to shoot up, go execute at this price right now?
Yeah, so that's the example that we always used was if Elon Musk tweets using the word Doge, like something like that, where you're setting up these triggers of information you would like monitored and oracleized, and then you have your own set of transactions. Now the thing is, if there was our private key were hacked or something, and someone started mis oracleizing information and said that Elon said the word Doge when he didn't. What's really nice is that the financial transaction flow funds never involves us in any way. So there's no benefit that a hacker would get from, providing this false information on chain. And so just removing ourselves from the flow of funds and making it running through the thought exercise of, okay, so say that a hacker had a private key, what is the worst that could happen? Trying to minimize that impact and say that no funds could actually be misappropriated. That's the goal, and that's what we're designing towards.
That's really cool, because I'm pretty deep in like the capital markets, private market space, and I've not come across any outside of like quant trading desks where they are analyzing in real time, user, social, basically public sentiment around certain, instruments, and then they will capture a position or what have you. But there's really nothing of that scale or magnitude available to the retail audience in either fintech platforms or Web2 or Web3 platforms, right? And it almost, what you guys are tackling is really smart, because I don't want to say all or generalize here, but and most percentages are made up, and so I'll go make up one. I would say 90% of trader sentiment around crypto is really is based off of social media sentiment, right? Most degens, most active, Web3 traders are operating, on the depths of Discord channels or crypto Twitter, or a couple of these kind of, and it's online. And if you have a way to crawl, scrape, capture that sentiment and then inform a position within your own, book, so to speak, that's a really cool opportunity.
Mm-hmm. Yeah, and to that point, we patented the entire, smart contract infrastructure flow and how we monetize that.
Awesome.
Yeah. So in terms of our own like defensibility in the market, we're super, super excited to launch it and see how people respond, and feel really optimistic about our competitive advantage.
I love that. Again, maybe selfish and I have some bias since I come from a background at NLP, but that's a really cool thing that you could obviously package up and have a whole monetization strategy and license that out to other, platforms that want to leverage, sentiment analysis in terms of trading, so to speak.
For sure.
Do you guys, do you guys, you guys are right now it's kind of fractional rounding into crypto, but is there any plans to kind of expand into other asset classes? Obviously within Web3, the natural expansion would be, could you roll up into maybe fractionalized investing into NFTs, right? Or, there's this tokenization is starting to become a burgeoning, concept, and the tokenization of real world assets, or, what we call securities, but, tokenization of stocks, right? If there's a Web3 tokenized stock of maybe Tesla, and I could round up 50 cents into a tokenized Tesla stock. Is that on
right. There was that near protocol with on Luna, Terra Luna, that had this whole thing, and the guy was like taking the SEC to court and stuff, and then it like, woof. But that's what that reminds me of. It's kind of agnostic towards the asset. I would, think it'd be really fun to involve something that's like a tokenized real world asset. And our platform would be agnostic towards what the actual asset is that's involved in that. As long as it can occupy the same like hexadecimal address that anything else does on some, EVM blockchain, then it would work.
Mm-hmm. And then in terms of the token play, I think that's a really interesting opportunity for distribution specifically, is being able to partner with projects that do have like token launches planned and have some sort of wedge for distribution with that. But yeah, it's definitely something we're looking into in the future, and something we'll test really actively and see what users want.
Do you guys have any partners that are involved with you guys from a company or partnership perspective that you view as strategic, that is really like empowering your platform?
Yeah, so we've had some pretty hard-hitting investors that bring a lot to the table in terms of portfolio companies. Like HOF led our pre-seed round. They came in with the biggest check. We had Kleiner Perkins invest most recently into our latest bridge round into this decentralized background trader. They don't typically touch crypto, especially at an early stage, but so we felt super, super excited about that. They invested through their Fairchild arm. So it's like we have a lot of portfolio companies attached to big investors who, we're really excited about fielding conversations with, as well as B2B conversations with exchanges, token companies, where we'll more intensely partner with them at the next launch. We kind of have to get that infrastructure working, playing, and then we can license out. But a lot of those B2B conversations are happening right now.
So you guys are on, the Apple App Store. You guys are on Android. If you're a user, you can go out, download, play around with Bits. But what if I'm an investor? I think you guys have a very compelling opportunity here. Might be something that I might explore, or, some of my peers or some of the listeners here. Is there an opportunity to invest in Bits?
Yeah, super, super excited to talk about this. So we have a two-pronged approach to the next raise. Since we are building something for the mass markets, we're opening up a crowdfunding campaign with Republic alongside them after we launch Bits 2.0, the background trader that's fully decentralized. So that's on more of, you don't need to be an accredited investor. It's for anyone from the crypto natives to crypto novices. That will be live, and it is going to be a cap threshold of what we're raising. But aside from that, if you are an accredited investor, we will be formally opening up the seed round after we launch the next version, because at that point we'll be post revenue, post product, post launch, and have quite a bit of momentum going. So yeah, we're fielding conversations.
Could I invest with my crypto? Could I round up my investment, my ETH from another wallet into?
That's a great question. honestly, we could, if it's above a certain threshold, we can make something work. But
hey, build it, build that doesn't exist right now. No one's done that. You guys have the capabilities, build it, IP it, license it, sell it.
hey,
now you have an on-ramp of the direct crypto into, for a non-accredited investors to get on the cap table of crypto companies.
Totally.
Beautiful.
But yeah, those are the two funders updates. So we're doing a round for 3 million with larger VCs, fielding conversations with leads right now, feeling really good about it. And then doing the crowdfunding campaign with the public all after launch. And then Jameson, do you want to talk about expected launch date on the development side? Go for it.
Yeah, so we have a big intermediate update that we're calling like 1.5, and that's coming out probably, I'd say, ideally within the month of June, if not early July. And then not more than just a few weeks after that is the 2.0 that has some more exciting decentralized features involved. And speaking to the Republic raise, I do think it is very nice and validating as a consumer-facing app to get validated by the public, and to have them represented not only like as the target audience but also on the cap table. So I think it is nice when you see consumer-facing applications approach that methodology for validation as well.
Yeah, enough traction to say that people are willing to, help you and fuel your guys' growth, right? Because hopefully, if your guys are successful, you are returning a lot of value back to your customers, right?
That is the plan.
It's a beautiful closed loop, relationship. Well, guys, thank you for your time on what looks to be a beautiful Friday out there. This was great. I've yet to come across the acorns of crypto. You guys, it sounds like you guys are doing it well. My wife downloaded the app while she overheard us recording this, so I might actually have a play around with you guys this weekend. But this is awesome, and I'm excited to have you guys on our fireside. So this will be it'll be awesome to get you guys in front of the community and they can start playing around with the app.
For sure. Super, super happy to be here. And thanks so much for the questions. And the last thing is, if anyone listening has any questions, feedback, wants to get in touch with us, they can check us out at bitscrypto.com.
Yep. And we will have their contact info and where to go and download the app on the notes of this recording. And again, Jameson, Alex, thank you for your time on this Friday. And I hope you guys have a great weekend.
Thank you so much.
Likewise.